define a specific coverage, again, the slicing and dicing capability of the graph model come in handy, because you can define any threat areas that you want the coverage to focus on, like cybersecurity threats. You can focus the coverage to any specific attack surface that is targeted by the threat actions. Or such as in this case, you can define very specific risk events no matter what type of threat actions resulted in those risk events. And of course, if you have a larger business or organization with multiple business units or reporting units, you can define or specify what part of the business you want the coverage to focus on. You can define the copay or annual deductible or risk event deductible, the risk event payout limit, and of course the annual payout limit. Now, the last area that is very important from an insurance perspective is really defining the coverage of the impact areas. You can potentially define different insurance limits also, similar to your car insurance. For example, if you have a windshield damage, then you have different deductible and payout limits than if you have a body limit. But what is more important from an enterprise risk management perspective is that when we define the risk for an organization, management teams can define specific non-financial or non-directly financial impacts, or in other terms, strategic impact areas that can be very relevant in terms of really evaluating the risk for the organization. This can be something like the loss of customer trust, which is a longer term impact coming through in an uncertain timing and uncertain magnitude of impact, but still relevant for the decision makers, or loss of regulatory trust. Of course, the challenge is that there is hardly any, or if any, insurance provider who will cover these type of costs. They really focus on very specific direct financial impacts that are easy to quantify in case of a risk event. So you need to define what is the impact area that is covered by the specific coverage.